And good afternoon. This is Jim at freechartvideos.com. It's 4:15. Today is the winter solstice, the longest night of the year, the shortest day, and I believe is it this evening we're in for a lunar eclipse. Unfortunately, I think I'm clouded in here in Atlanta, but we'll see. This is the daily S&P 500 update being brought to you by freechartvideos.com, using time-honored techniques to understand modern markets. And read the disclaimer here. Basically says you are on your own. Don't trade because I said so. Trade because you think so. I'm not a licensed professional. I'm just a guy that draws lines on charts. Additionally, the folks at www.freestockcharts.com have agreed graciously to let me use their charts and with the understanding that I give them credit, and I think that's fair. So let's look at some charts. All right, here's the S&P 500. I remember when I was a kid there was a game, I forget what it was called, something like pick-up sticks, and you had all these different colored sticks and you'd have to somehow pick them up in a particular order or particular color, and I said, this looks just like that game. But I want to show you, again, to remind you of what we've been talking about ever since early October, when this inverse head and shoulders pattern broke out, that we were expecting a move that would culminate, well, I don't want to say culminate, but a move that would at a minimum get to 1240 to 1250, and we have obviously done that, and now it appears that we are taking this even higher than the minimum. And of course, a word of caution, what we need to be on the watch out for is signs of weakness, because when we were in this channel and we knew that there was a target 1240 to 1250 and such a well-defined pattern, I'll be honest with you, it's pretty easy to not really worry about it too much, because when you see things just chugging along, you just say, it's going to get there. However, now that we have reached that minimum target, you don't have that same sense of assurance that things are going to just keep on chugging along, because at some point we're going to head back down, and we're going to head back down for some type of corrective move. I don't really know exactly right now how much, but at some point I'm thinking 3 to 5%, something to scare people to shake out weak hands. So let's zoom in and let's take a look at just the last couple of weeks. Okay, just to remind you, this blue line and this blue line were a channel that worked for 9 weeks. If you want to see more on that, go back to a video, find one of my videos that was done, let's say sometime in up until the beginning of December. That channel had been working for about 2 months. Then it broke down. We made a pattern that while it was being formed, we did not know if this was going to be a reversal or a consolidation. A reversal would be we break down out of the channel, we go sideways for a bit, then we head down. In other words, this whole thing changes the direction of the trend. Instead, and as I kind of suspected, I think I was thinking about the chances were about 2 out of 3 that this would make it up out of here. And it did. But if you recall, and again, you may not, I mentioned that now that we broke down out from the underside of this channel, I do not see us getting above this blue line, but we may make that minimum objective of 1240 to 1250 by just kind of going up and hugging this line. And I don't always get it that right, folks, I'll be honest with you, but by golly, that's exactly what we're doing. We got up into breakout territory out of this pattern, and we started testing this line. Is it ascended? We tested it here. We tested it again here. And my feeling is we are probably setting up either for another test or at the minimum a run at about 1260. And here's why I'm saying 1260. The reason I'm saying 1260 is because we encountered a line of resistance at about the 1247 level that was attacked once, twice, 3, 4, and then finally on the 5th attempt it broke out, and you can see that long candle there that shows there was a lot of pent-up buying pressure that was being held in check by this line, and then when it finally broke out, boom, it just busts out in a pretty swift move, much the same way we broke out here in a swift move after being held in check by this descending line. And yesterday, after that move, things pulled back, and you know, the way you trade in inverted head and shoulders, even if it's the consolidation variety, you wait for the breakout and then you buy on the pullback to the neckline. So I bought some 3X funds right here on this neckline near the end of the day yesterday. They all did very well today. I still have them. I did not sell because I think we go to 1260. Why? Because that is what this pattern points to. If we measure the depth of the head right there and we tack it on to the neckline, we actually end up at a little over 1261, but I'm not going to get greedy. As a matter of fact, if we get to 1259 and things start to look a little squirrely, I'm ready. You know, I will count my blessings because I was not counting on getting this extra mileage out of this rally. At present, I don't see any real sign of a top. So as long as we keep making these consolidation patterns and we keep moving up, I'm saying you play it, but you play it a lot more carefully than what you would do if you were in at the 1130s or 1140s. Because if you were in 1130, 1140, you had about an 80% chance that you're going to see 1240 or 1250. Right now, it's really, frankly, anybody's guess. I will tell you, however, if we take a look at the Dow, which I'm going to do right now, and here's our Dow Jones Industrials, you can see the inverted head and shoulder that corresponds pretty much to the inverted head and shoulder we had in the S&P. This is the large one. You see down here we're looking at a daily, or rather a 4-hour chart. As we look at the measurement for this pattern, it has not yet made its measurement. This pattern points to about 12,000, and we still got 460 more points to go. So I'm kind of filtering all of this through in my thinking about what's going to happen with the overall markets. That I think the Dow's got more steam in it, it just has more room for growth. So how that translates into what the S&P does, I can't tell you for sure. I can tell you that the S&P has a long-term minimum target of 1340 to 1350. I don't think it's going to make it at the same time that the Dow reaches 12,000, provided this pattern completes and heads up that high. But that's what makes charting interesting. You get into these situations where you have some conflicting data, and you have to just kind of sometimes take a few steps back from it, squint your eyes, and let some of the fuzziness of it give you an overall impression. Additionally, you can see this green line that is a line of major importance. This it was drawn over the peak back in April of 2010, all the way back to the top of the bull market back in October of 2007. A lot of people were expecting when we reached this line, a lot of bears were thinking, oh my goodness, look, it's just going to come all crashing down. We've got this line of resistance. We've got this line of resistance. The Dow's going to turn and head back down for new lows right here. But in fact, it did not, because right here we had the golden cross where the 50-day crossed, pierced up through the 200-day moving average. Same thing happened in the S&P. Same thing happened in tech stocks. So anyway, that's where we stand on the end of the day on December 21st. I hope you got something good out of the market. Things did very well for me today. I just had the right stocks at the right time. I think one of my accounts was up about 3%, another one up 2%, and another one 2.5%. So I have no complaints. Hope you enjoyed this, and please, when you get a chance, stop by freechartvideos.com. The site is there, and the way I'm able to keep this free is by your traffic and by telling your friends what I'm trying to do. And I've only been doing this for a little bit more than 2 months. What I'm trying to do is to get a following, quite frankly, because I think I'm pretty darn good at reading charts using these time-honored techniques. So if you get something out of this, please visit the site often and tell your trading friends about it as well, because it's been working very well, folks, and I hope it continues to work well. I appreciate your watching this video, and stop by the site, join the forum. Take care.